Hello everyone, welcome back to Calgary's real estate market update for May 2025. I'm Juros Markovic, Calgary area realtor, and today we will review everything that you need to know about what happened in April. Is Calgary's housing market finally cooling off, or are we just shifting gears? After 2 intense years marked by bidding wars and record low inventory, April of 2025 signals a new chapter. Inventory has more than doubled, sales are softening, and prices? For the most part, they're holding. But that is only half of the story. We have just wrapped up the federal election, and the re-elected Liberal government has big plans for housing. From supply-focused programs to new tax changes that will affect investors, flippers, and even long-time home owners, it is all coming into play. In today's update, I will walk you through what's happening across Calgary's housing segments and different districts, how new government policies could shape next 12 to 24 months, and what you should be doing now if you are planning to buy, sell, or invest in this changing market. So let's dive in. We will start with Citywide snapshot. Sales in April were 2,236 homes, down 22% from the last year, but still within normal seasonal trends. New listings are 4,038, which is up 16% from the last year. Inventory is sitting at 5,867 active listings. That is more than double from the April in 2024. Benchmark price for all property types is 591,100, which is down for 1.4% year over year. Months of supply is 2.62 months, which means that we are officially in a balanced market. So now I would like to put some perspective here. Last year, we were hovering around just 0.95 months of supply, which was ultra tight. So even though 2.6 months sounds modest, this shift is significant. It means the buyers have more breathing room and the pace of price growth has leveled out. But this balance is not universal. So let's break it down by property type and districts. We will start with detached homes. Detached homes remain the most in-demand category, but activity has slowed. Sales was 1,102, which is down for 16% comparing to the last year. Benchmark price was 769,300, which is up 2.4%. Months of supply is 2.28 months. So now, what is interesting? The best performing district is City Center with 989,600, which is 4.8% increase over the last year. What is the weakest performing district? It is Northeast actually, with 579,700, only 0.5% gain. So what does this tell us? Luxury homes in either city are still attracting demand and holding the value, while more budget-sensitive districts are plateauing, likely due to affordability ceilings and tighter lending. Now we'll move on semi-detached. Sales was 190, which is down for about 25%. Benchmark price was 691,700, up 3.6%. And months of supply is 2.55 months, nicely settled in a balanced market. Again, top district is City Center with nearly 6% year-over-year price growth. And the weakest district is North, showing zero price growth compared to April 2024. This segment has slowed the most in sales volumes but still holds value in mature central areas. Suburban semis are no longer the deal they were 18 to 24 months ago. Alright, now we are moving towards row homes. Sales were 355, down 26%. Benchmark price was 457,400, which is flat year over year. And months of supply are 2.83. Again, best performer, City Center, 3.4% increase. And the weakest, Northeast Calgary, with 3.5% decline. This segment has now entered fully balanced territory. Investors and first-time home buyers should keep a close eye here, especially where rental demand is strong. And last but not least important for today is apartment segments with the sales of 589, down 28% comparing to the last year. Benchmark price was 336 even, which is flat or down 3% from its peak. And the months of supply are sitting at 3.17 months, the highest of any category. The top district, the winner is Southeast, 370,300, up 6.8% year over year. And the loser in this category is, unfortunately, Northeast again, 257,600, down 2.2% comparing to the last year. Apartments have seen a major shift. They are still the most affordable option, but also the most sensitive to oversupply. In fact, Northeast District now has 7 months of supply, well above balanced, deep into buyer's market. So if you are a buyer or investor looking for leverage, this is the segment to watch. Now let's take a quick look over regional markets. Adri, 544,700, flat year over year, but balanced with 2.3 months of supply. Cochrane is sitting at 592,000 for a benchmark price. It is a record high ever recorded in Cochrane, which is up 6% year over year. Okotoks is at 627,100, up 2%, but showing signs of actually leveling out. Overall, looking into our satellite communities around Calgary, Cochrane is the winner. Even as the rest of the market cools, demand is pushing prices to new highs. Now, when federal elections behind us, there are many policies that could affect housing market. With the Liberal Party returning into power, here is what you need to know about housing-related policy shifts that are likely to influence the market over the next few years. There are many housing supply initiatives. Their goal is to build almost 4 million homes by 2031. Well, we know Liberal track record, how likely this is going to happen, we don't really know, and I doubt, but time will show. They are starting accelerated construction fund to support densification and faster approvals. GST exemptions for new rental construction is now permanent, and they are continuing to support the first-time savings accounts. Now let's take a look into a few tax policy changes. Capital gains inclusion rate rising from 50% to 66.7% on profits above 250,000 started June 2024. Tighter enforcement of the anti-flipping tax on properties sold within 12 months. And vacant home tax could expand to more cities and federally owned land. And another very important one to keep an eye on is potential introduction of a home equity tax. I want to remind you one thing. While everyone is saying, oh no, this is not going to happen, you should remember that CMHC has actually done a study, spent millions and millions of dollars actually to see how that home equity tax would look like and how big impact would have. So I suspect that we might see something coming up that is going to dig into our home equity pretty soon over the next probably 4 years. One thing that you should also pay very close attention to is potential introduction of a home equity tax. We know that no one has run a platform in the elections on this, but I want to remind you that CMHC, Crown-owned housing corporation, actually did an extensive study on an impact of home equity tax. So something just to be aware of and keep an eye on. So what does this mean? If you're selling a second property or flipping, your tax bill could go up. But if you're a long-term buyer or looking for rental income, there are new incentives to help. Now, this is an advice segment. My advice for buyers, sellers, and investors. Well, let's start with the buyers. This is the first time in 2 years where you're not rushed. You can negotiate, you can ask for conditions, focus on segments like apartment and row homes, or go after higher end homes that are sitting longer. Sellers, well, you have to be sharp. No more testing the market pricing. If your home is under 700,000 and well prepared, you will still move quickly. But buyers will have options and expectations. Investors, well, the game has changed. You need to work the numbers harder, especially with the higher capital gain tax and longer holding periods. Focus on cash flow and target areas with strong rental demand like city center or southeast condos. So, what's next? We are no longer in a seller's frenzy, but also we are not in a downturn. Calgary's housing market is entering a strategic phase. And that means understanding your numbers, your timing, and your options has never been more important. If you want help navigating this shift, reach out. Let's sit down and walk through a plan. You can call me, text me, email me. My contact information is right below. Thank you again for watching and see you next month.